cycle. The world just reached too much debt back in 2008. And what we've been doing since then is servicing the debt. We've also got some other key factors. This chart is a chart that I produced a few years ago. It's still the single most important chart in macro and explains everything that is going on in our world today. And this is the fact that demographics is everything. And the demographics of the aging populations across the Western world, these are the US numbers using the labor force participation rate, explain the build-up in debt. Why that is as populations get older, economies slow down. To service the existing debt, it requires more debt. To create GDP growth, you need more debt. See, GDP growth is driven by population growth, productivity growth, and debt growth. And debt growth has been the driver both in the US, in China, in Europe, in the UK, all across the world. It's all driven by the same dynamic, and that's this aging population thing. It slows down GDP growth and creates unstable economies. And that chart just shows the stunning correlation. Poor people can't afford it because they've got variable income, which is earnings, and it buys them less of these every year. What's actually happening, what that mechanism is a tax on everybody of 8% a year. A global taxation of 8% a year that you don't understand. You just don't get richer by 8% a year. Add in another 3% global inflation. You're at 11% debasement of currency. That's your hurdle rate to stay as wealthy as you are today. That's a staggeringly difficult thing, considering most asset classes don't produce those kinds of returns, which is why so many young people have come to crypto, because crypto completely upends this system. They can't buy houses. They can't buy all of the other things that older people were able to afford. So they forced into more speculative, higher risk assets that have much higher returns. It's the only way out of the trap. And the trap is driven by this debasement. So if you want to see how close the correlation is, and I'll say the full correlation in all recorded history, we've never had anything like this before. So here's Bitcoin since 2012, 130% annualized. That's including 3 gigantic drawdowns. Ethereum at 113 and Solana at 142. And Solana obviously starts later. So the magnitude of the returns is enormous. The volatility we have to stomach to do it is the game. And it's a matter of, I've told everybody about the don't fuck this up thesis of how to deal with volatility, how not to lose control of your tokens, because this stuff compounds over time. Bitcoin since 2012, 27.5 million % returns. Again, nothing ever has remotely come close to this. So that's the opportunity. And we said the tech stocks, they're great, and Bitcoin or crypto is great. Fantastic. Then you look at the NASDAQ versus Bitcoin, it's down 19. There's a 3-month lag, and it drives it. So here's a simple way. We're now seeing people saying the economy's slow, shipping slow, all of the tariff stuff. The market's priced in this tariff stuff last year once they saw the probabilities of a Trump re-election. So what we've got here is the economic surprises index of the US versus other countries in the world. When it's going down, the US is underperforming in economic surprises term. When it goes up, it outperforms. It's basically just following the dollar and rates. And what it's saying is, whatever noise we're seeing now in the economic data, which is some of the tariffs-related stuff as people have built inventories very quickly, liquidity is going to completely erase that very quickly. We saw it is now an increase in economic activity going forwards. So the back end of the year is going to look very different than the first quarter did. I use a lot of technical analysis. I even do it on economic data, which is abhorrent to most people, but it's worked for me for 35 years. And this is a system called DMARC indicators. And basically it's telling you that we should see the economic surprises starting to rise. Bitcoin is led by financial conditions here by 3 months. The year-on-year rate of change of Bitcoin, we should start to see very dramatic movements in the price of Bitcoin going forwards. And I'll show you a bit more about this in a sec. And to go back to that idea that the Trump cycle is repeating, it's an incredible repeat, but one of the best setups I've ever seen, because we know the debt has to be rolled. We know the forward-looking liquidity is coming, and we know how assets react to it. So it's like having a crystal ball. Nothing will be perfect, but directionally, it should be right. So let's look at this liquidity cycle, break it down a little bit. So when you look at it, global M2 is a good proxy for total global liquidity. Why I use this on these charts is it's more real time. Total global liquidity is takes a longer to calculate for the various data inputs. But global M2 does a very good job. Again, like the dollar version, this is wildly outperforming what happened at the Trump previous cycle. So we've got plenty of dollar liquidity. Global M2 is driven by two things: the dollar account, you have the correction, and then it goes. And I've talked about this. There's three phases of the banana zone. Phase one was Q1 last year, as we started to break out in all these measures, new all-time highs in liquidity. Bitcoin goes to all-time highs. We have the corrective period, which is the correction zone. And then we get the banana zone part two, which is usually alt season. This is the fabled chart that everybody in the world has copied from me, but this is the global M2 chart versus Bitcoin with a 12-week lead. It's been like voodoo. It is the most voodoo-like chart I've ever come across, and it works. Will it work entirely? Often what you find is later as the index breaks out, again, the same thing with M2, the market goes higher. And the reason being is I talked about the correlation. Well, here's the chart. It's a 90% correlation with weekly global liquidity. That's Bitcoin. And the NASDAQ is a stunning 95%. And so it's hard to refute that this is not what is happening. It's so obvious, but most people want to refuse to believe it. They start mid-curving the whole thing, saying, well, that's not the printing of money, and this is not how it is. It's so clear in the data. It's so obvious that this has been going on. And even when you listen to Scott Bessent speak or Janet Yellen speak, they all talk about this. They talk it about in the terms of basically on this presentation, but we've also imputed how it reacts to ISM. And if we get to that 57 ISM, that puts Bitcoin at 450,000. Is it exact? Will it be exactly that? No. But all of the people who are saying it's going to 150, 250 are probably scarred from last cycle without looking at the forward-looking data. So it's incredibly positive for me. It also is what drives altcoin season. So the fabled altcoin season, everyone's like, it's never going to happen again. It's just a function of the business cycle. Why? Because household earnings are still subdued, because the business cycle is subdued. Average businesses outside of technology have exploded higher, and people are massive bearish. What was interesting is we just saw the charts coming out today was that retail investors had been buying the dip. Institutions still haven't. They're all massively underweight. There's another chart, sentiment, bulls versus bears, bearishness, again, all-time record highs, only ever been exceeded a couple of times in history. Consumer expectations for declines in stocks near all-time record highs. The VIX index, the measure of fear of volatility in the index, in the top three spikes of all time. And again, using my DMARC indicators, it's generally a reversal pattern. So quickly, this is going to be a game for Sui to play that should outperform Solana, which is an amazing project with a fantastic community, great technology. This is the faster horse. So that's how I look at things. The other one was interesting. Again, another hilariously out-of-date chart is Deep. Deep exploded out of this. Deep is, if people don't realize, I just got it from the asset management firm that I run. Deep was the best performing crypto asset of the top 300 in the last month.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.